Hey guys, welcome back to High Yield Intraday Trading. I hope every one of you is doing good. So before we start discussing today's topic, let me request you all to subscribe to my YouTube channel by clicking on the subscribe button here. Once you click on it, you will get the confirmation on the left bottom corner. Post you subscribe to my channel, also make sure to press the bell icon and click on all. You will get the confirmation on the left bottom corner so that whenever I upload a video, you get the notification about the same without any misses. Also, I would request you all to subscribe to my Telegram channel with the name HYIT Intraday Calls because I share a lot of things over there and it might be helpful to you in some way or the other. All right, so before we start with today's discussion, please allow me to mention about an offer that will reduce your capital requirements for trading various segments like the NSE futures and the MCX futures. Okay, talking about the NSE futures, you can trade contracts like Nifty, Bank Nifty, SGX Nifty, etc. with just 6,000 rupees for one lot, whereas in MCX you can trade one lot of crude oil, copper, natural gas, etc. for just 4,000 to 6,000 rupees. Okay, for gold and silver, it will cost you around 10,000 rupees per lot. And not only this, you will be happily surprised when you get to know the other features that are being offered. I can't give you all the details here as there are many, but I will surely share all the details post you get in touch with me. In today's scenario, if you want to trade one lot of crude oil, you need to have a minimum of 1.6 lakhs as your capital, that is 1 lakh 60,000. Similarly, for Nifty, for just one lot, you need to have at least 1 lakh as your capital. Now replace 1.6 lakhs with 4,000 to 6,000 rupees and 1 lakh with 6,000 rupees. It does make a lot of difference to a retail trader like you and me, right? So that's the help I want to extend or offer. And if you are interested, then you can get in touch with me on the details that are being shown on the screen and we can take it forward. All right, so let's go ahead and work on another strategy and try to help the guys who are trying to build their own strategy. Okay, so as we all know, when a stock is in an uptrend, it has to show some pullback. It has to show some retracement before it actually starts going up further, right? And when these kind of stocks give a pullback, the smart traders, what they do is they actually go ahead and add in more positions. They buy more shares to their trades. Okay, now this exact scenario is called buy on dips. Okay, and we will make our strategy exactly on this very scenario, and that is why I have named it as the buy on dips strategy. Okay, now the next thing is when we make a strategy, there are some prerequisites that needs to be filled, right? I mean, when I say prerequisites, you can take them as rules. So you have to very well define some rules and you need to make sure that the rules are not broken, right? So only when you define something and when you see that that exact thing is happening on the charts, that is when you go ahead and initiate your buy or sell position, right? So I meant rules when I said prerequisites. Okay, so for this strategy, these are the rules or the prerequisites. Number one is the stock has to be making higher highs and higher lows so that we can be sure that the stock is in an uptrend. Okay, that is point number one. Point number two is when the stock moves up, the number of points for which it moved up should be greater than the number of points it covers when it gives a pullback or a retracement. If that is confusing, let me take you to the chart and let me just quickly explain what I meant by point number two. Okay, right. So this is what I meant. So this stock is going up, right from here to here, and then it is giving a pullback till here. It is getting a support here, again moving up, giving a retracement here, taking a support and moving up again. So what I wanted to say here is the retracement that happens here, right? It may be here or here or here. This retracement should be lesser than these up moves, right? These up moves. So let's say the move is from, just a moment, okay? Let me bring in the pen. So let's say the move from here to here is 10 rupees. So the retracement that happened from here to here should not be more than 10 rupees. It should be less than 10 rupees. Let's say maybe 5 rupees, right? Similarly, when this stock is going up from, this is the entire length, right? From here to here, let's say the move was for 20 rupees and then it retraced from here till here. So this retracement should not be more than 20 rupees. It should be less than 20 rupees. It might be 10 rupees, 7 rupees, 13 rupees, whatever it is. Right? So I hope you got the point. Now let me go ahead and delete it and let's get back. Just a moment. I'm sorry. Okay, let me take it off. I'll bring in the chart again when it is required. So I hope point number 2 is clear. Now getting on to point number 3. The third requirement is you should know about a particular candlestick pattern called as the three black crows. Okay, now for the guys who don't know about this particular candlestick pattern, three black crows, let me go ahead and give a quick explanation about this particular candlestick pattern. Okay, so basically the three black crows candlestick pattern is represented or is confirmed when we get three consecutive red candles going down. And this tells us that the stock prices will move down further. So whenever you see three red candles going down one after the other consecutively, continuously, three red candles, then by taking or by including all those three red candles, that particular candlestick pattern is known as the three black crows candlestick pattern. I hope that is clear. That is all about it. That is as simple as it. There's nothing more or nothing less that has to be defined about this particular candlestick pattern. Okay, so the only thing that you need to mark, or the only thing which you need to find on the chart, is are three red candles which are going down continuously one after the other. As simple as that. Okay, but you may ask me that we just talked about buying on dips, which means that we need to take a buy trade. So what is the significance of the three black crows? Well, I will explain it on the charts in some time. You will get the point when I explain the strategy. Okay, so these are the three prerequisites that needs to be taken care of. And now let's get on to the chart. Let's hit the chart and let me explain the stuffs over there. So I have already drawn the complete scenario here so that we can save some time. So as I said, the first thing that needs to be taken care is you need to find a script or an indice which is in an uptrend. So this is Nifty's chart, a 1 day time frame on the top left corner, as you can see here, Nifty's 1 day chart, and it is very clear that it is making higher highs and higher lows, higher highs and higher lows, higher highs and higher lows, which means that it is in an uptrend. So the first prerequisite is met. Okay, now the second prerequisite is look for three red candles. Okay, now concentrate and focus on this particular area, the one which is in an oval shape. We see three red candles, right? Let me bring in the pen. We see three red candles, right? One, two, and three. So these three red candles, which are being formed one after the other in the lower direction, in the downward direction, makes the three black crows. Okay, one thing that needs to be taken care of is the low of the first candle should be higher than the low of the second candle. The low of the second candle should be higher than the low of the third candle. If these things are met, then you know that we have a three black crows sitting on the chart. Now that fulfills another prerequisite for this strategy. Okay, now one more thing that you need to take care here in this strategy is when this third candle is formed, when this third red candle is formed, it should not collide with the previous uh, higher low. So this is the higher low, right? This is the higher low, and the dotted line that you see here, that is that I have drawn that dotted line so that it can be clear on the chart that the higher low, the previous higher lows, the previous higher lows price is not the same as the third candle's low's price. So let's say if this red candle closes here, somewhere here, then this becomes an invalid scenario because the retracement is right from here to here and the up move was right from here to here. So both of them are same. So there is no meaning of higher highs and higher lows. Now this scenario becomes a sideways market. I hope you're getting the point. Okay, so you need to make sure that the third candle's low should not be same as this particular higher low. Okay, that is one more thing that you need to take care about. Okay, now moving on to the strategy. So right now we have made sure that the stock or the index is in an uptrend. Second thing that we have made sure is we have found the three black crows. The third thing we had made sure that the third red candle's low is not in the same range of the previous higher low. Now, here comes the strategy. Okay, you need to wait for this red candle to close. That is very obvious, right? The next candle to this red candle should be a green candle. Why? Now, remember this point. Three black crows, if you look at it theoretically, it tells that whenever we get a three black crows candlestick pattern, we can expect the stock to be going down further. But in this case, it is very clear that since we are getting this green candle after this third red candle, that shows us that there is some support lying here. There is something which is supporting here because of which the prices are taking a support at this point and it is moving up further because of which this green candle is being formed. So the three black crows fundamental or the three black crows theory is denied here. So the stock is denying to go down further. It is ready to make an up move. Okay, I hope that is clear. So you need to wait for the fourth candle. So this green candle is the fourth candle in this strategy. Okay, so the fourth candle has to be a green candle, and that gives us a hint that this particular stock price is not ready to go down further. It is taking a support at this point somewhere and it is going up. So where will be your entry? Now, one more thing before I discuss about the entry. The green candle which is formed here, make sure that it is a big enough green candle. It should not be like a green candle that we see here. Let's say this one. Okay. It should not be a green candle like this. We don't recommend this. It should not be a small green candle like this. We don't recommend this. Okay. We recommend green candles like this. We recommend green candles like this. So you have to make sure that the fourth candle that is being formed in this particular strategy, which has to be a green candle, that should be solid enough. Okay, it should not be like a doji, or the body of the green candle should not be small. The body of the green candle should be a solid green candle. Okay, so the more solid green it is, more are the chances that the stock prices will go up. Okay, remember that. Now, where should be our entry? Our entry will be at the top of this green candle. So you need to wait for this fourth green candle to close. And once it closes, you can initiate your buy entry. So in this case, the high of this green candle is 11,112.25. Let's round it up to 11,113. Okay, so once this green candle closes, you can initiate a buy trade at maybe around 11,114 or 15, whatever is feasible for you. Okay, so that is your entry. Put the stop loss at the recent swing low. So this is the recent swing low. Put the stop loss there. Now coming to the target. Now there are two targets that can be defined in this particular strategy. Very clearly, the first target is this point, Why? Because it is a resistance. And why is it a resistance? It's a resistance because it is a swing high. As simple as that. So if you are taking an entry here, your first target should be the recent swing high. That is a very basic of intraday trading. And 90% of the time or 85% of the time, this target is met very easily. Okay, so that is target number one. Now, if I talk about target number two is somewhere here. Now, why have I mentioned this as target two? Because if the stock is strong enough to move up, if you see that the stock is clearly taking a support and moving up here, then this entire length, right from here to here, can be covered after your entry. So this length will be very same as this length. Okay, so uh, what is the move? Let's find the move. It will be like 10,900 to 11,300. So around 400. Let's round it up to 400 rupees move. It is a 400 rupees move, right? So your target two is also giving you a 400 rupees move, right? 11,100 to 11,600, like 500 rupees move, which is very close to 400 rupees, right? So this is how you define your target number one and target number two. Okay, and target number one, if you feel that it is a very small target, it is not. Okay, it is not. It is around. I'm sure it should be more than 200 points, 11,100 to 11,340. We are talking about a 340 rupees move, guys. Sorry, 240 rupees move, guys. So even if you book your profits at target one, it is a 240 rupees move that you are booking. And if you are somebody who has the guts to stay back in the trade, then you will be a person who will be catching a move of around 500 or 400 rupees, right? So that is how we trade this particular strategy. Clear? Now, moving on to another scenario that we get here. Again, the same thing. Stock is making high highs and high lows, and then we see these three red candles. And the low of candle number one is higher than low of candle number two, and the low of candle number two is higher than low of candle number three. So this makes a three black crows, right? So put your stop loss here. Your entry will be at the fourth green candle, and this green candle, as you can see, is a solid green candle. So once it closes, your entry will be here. Okay, and then your target number one will be here, because this is the recent swing high that has been made, and the stock might face a resistance here. So this will be your target number one, and your target number two can be somewhere here, because if you want to cover this entire length right from here to here, the same length is being covered from here to here. Clear? As simple as it is, guys. Okay, so I hope you're clear on each and every aspect of this particular strategy. Okay, now so I hope you understand the explanation for the strategy, but again, it's not all. We are not finished yet. Okay, we have to dis- we have not discussed everything about it yet. So the thing to note here is whatever has been explained in regards to the strategy obviously are solid, because we have a very convincing logic based on which we are preparing the strategy. But as I always say, multiple confirmations are very important. Okay, so when we see that a candlestick pattern like three black crows fails, and the fourth green candle, which is the setup candle, is taking a support and moving up, don't you think if we bring in an indicator which also confirms that it is a support level, will make the setup more stronger? Of course it will, right? So combine these things with technicals and it will be magical. Okay, so what I mean to say here is, if we get back to the charts here, this fourth green candle, this fourth, uh, this fourth green candle is your setup candle, because you are taking the entry here after the candle closure. You are taking the entry here, putting your stop loss here, and your target is number one here, number two here. Now, this is just price action. Don't you think, as I said, Don't you think if we bring in a technical, let's say a pivot line, okay, let's say a pivot. So let me get back to the chart here, and let's say we have a pivot line somewhere here. Okay, let's say we have a pivot line somewhere here. Or to that matter of fact, we have a moving average which is moving like this, and we clearly see that the support is being taken just above the moving average or exactly at the moving average, whatever it may be. So that adds an extra confirmation that that the stock has more chances of going up, because price action is telling the same thing, the technicals are also telling the same thing. So both are hinting that the stock prices might go up further because this is a strong support level, right? So that was the whole point that I wanted to make. I hope that is clear. So that is why I'm requesting you people to bring in a technical as well, any indicator that works for you. Okay. Again, let me repeat this. In India, trading with just price action is very, very risky. It's not like the US market where things are very stable, and that's the main reason why you see so many full-time traders from the US. But here in India, people struggle even to be profitable. All thanks to the manipulators, or what we call them as operators more commonly. Okay, so we need to also take care of this particular thing. Okay, we need to take care of multiple things when we are finalizing a particular strategy, because that is a thing which we are going to use maybe for our whole life, and that is the thing on which we are depending, and we are hoping that this particular strategy will fetch us with real money. So you need to take the decisions really carefully and very wisely. Hope you're getting the point. Okay, so that's it from my end, guys. I think the video has exceeded. I mean, it's quite a long video. I'm really sorry about it. So let me wrap up here. So that's it from my end, guys. And for the guys who have not watched my previous video, I have put in the video card on the top right corner of the video. The I symbol that you see there, you can click on it and watch my previous video. And as always, we request you all to like and subscribe to my YouTube channel. And also, please do not miss the ending of this video, as you might get some more information about HYIT that might be helpful to you in some way or the other. And please feel free to ask your questions or queries, if any, in the comment section, and I will surely reply back to them. And also, please do not forget to like this video if you liked it. So that's all from my end. I'll see you all later. Hope you all will stick back. Happy trading and take care of yourselves. Bye bye.